Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about 10 stocks that are undervalued currently. This was a video that was requested by you guys a few times in a row, so I'm like, you know what, let's go ahead and do this. So we're looking at 10 stocks that have PE ratios quite a bit lower than what all other stocks in the stock market have currently. Now, with undervalued companies and companies that have PEs much lower than other companies, right? Usually it's because the perception of that company is that the best days of that company are behind it. That this company is going to come upon either short-term troubles or long-term troubles for whatever reason, guys. Maybe it's a competitive landscape. Maybe it's the management mismanaging the company. Like, whatever reason, that's the perception out there many times with undervalued companies. And what we're going to base a lot of today on is the trailing 12-month PE. So there's three different real PEs you can look at, right? There's what the company did for EPS the previous year versus what the stock price is. And you can calculate that. There's also the forward PE, which is actually my favorite, but we're not looking at that for today's argument. But the forward PE is judging what the company is probably going to earn next year versus what the share price is. Today, what we're looking at is actually my second favorite PE ratio, which is the last 12 months. It's called the TTM, the trailing 12-month PE ratio. So that means last EPS for the last 4 quarters versus what the company's share price is. And that's how you calculate this PE ratio we're looking at today, guys. So I hope you enjoy this. Let's get right into it. So number one is Ford, the Ford Motor Company, one of the biggest automakers in the entire world, guys. This is currently a stock that has a PE ratio, like I said, the last 12 months of 12 right now. All these stocks we're going to look at today all have under a 15, while most stocks in the stock market currently have well over a 20 right now. So this one has under a 12. It has a great dividend right now. Look at that dividend, over 5%. And then let's look at the last 3 years as far as what revenues and profits did. So revenues are actually trending up. This is great from what it looks like here. 2014, they did 144 million. This 144 billion, excuse me. 2015, they did 149 billion. And then this past year, they did 151 billion dollars, guys. So that trends very well as far as revenue goes. Then we go ahead and we look at the net income. They did just over $1 billion in 2014. 2015, they jumped all the way up to over $7 billion. This past year, they dropped, quite a bit down there to $4.5 billion. Now, with all these companies, you want to dig into why a company went from $1 billion to $7 billion in profit, and then from $7 billion to $4 billion in profit. Like, some of these companies have ridiculous fluctuations in that net income. You should always want to look into that. So, and how do you look into that? You go to the investor relations page, you look at past annual reports, and then you can usually discuss in that annual report somewhere why that company had such a increase in net income or such a decrease in net income, guys. So definitely look into that. Next one up here is Micron. Micron is a huge memory chip company. They make memory chips for computers, cell phones, all types of stuff, guys. That's Micron's business. This company has a PE ratio currently of a little over 13. And this one, the revenues are trending down. So this one, they did over $16 billion in 2014, over $16 billion in 2015. And then this past year dropped down to a little over $12 billion in revenue. Then we look at the net income. They did $3 billion in 2014, then down to $2.8 billion in 2015, all the way down to a loss last year. Now, once again, how do they have a positive PE of 12? Well, because once again, it's taking the last 12 months into account, not last year. Because if it was last year, it would have no PE ratio on this company, right? But since it's taken the last 12 months, the last 4 quarters, three of the four last quarters for Micron have been profitable. So that's how you get to a PE of that. And if you actually look at Micron on the forward PE basis, it actually drops even quite a bit lower, guys. Delta Airlines, one of the biggest airline companies out there. They currently have a PE ratio of 10, so very, very low on this one, a 10 PE ratio. And this one, we're looking at a income of revenue of $40 billion in 2014, $40 billion again in 2015, pretty close to $40 billion this past year. So they're very consistent as far as revenue goes. Net income, they went from $659 million in net income in 2014, all the way up to over $4 billion in 2015, another $4 billion this past year, guys. So net income for this company is obviously trending pretty good. good. Part of that's oil prices. Obviously, oil prices came down substantially starting in toward the end of 2014 into 2015. Like oil, it began to crash in 2016. It was super low. Even now, it's still super low. Question is for airlines, right? Are oil prices going to stay down here, or will they ever go back up to $100 a barrel or something like that? If that happens, airline profits will usually drop. Next one up here is Goldman Sachs. Goldman Sachs. So what does Goldman Sachs have? They have a 12 PE ratio on this company currently. Very nice. They have revenue that is downtrending here. 2014 they did $34 billion. 2015 they did pretty close to $34 billion, and then this past year they did only $30 billion in revenue here. Net income is pretty consistent though, $8.4 billion in 2014, $6 billion in 2015, and this past year it went up to $7.3, almost $7.4 billion in net income. So that definitely might be one to look at if you're looking at the banks. I mean, Goldman Sachs, in my opinion, the best run investment bank out there. They're so well politically connected. When you see how many people, in the White House, or how many people, in presidential cabinets of the past and current have to do with Goldman Sachs and have worked positions at Goldman Sachs, it's quite startling, guys. It's quite amazing. So this company is the best run investment bank out there, and they're so well politically connected. It's amazing. Aflac, an insurance company, shows up here, guys. An insurance company. This company has a little over a 12 PE. So once again, very low, very low. Revenues $22 billion in 2014, dropped down to $20 billion in 2015, and then this past year a little over $22 billion once again. So pretty consistent revenues. There's $2.9 billion in net income in 2014, $2.5 billion, 2015, this past year $2.6 billion. So this is actually a very consistent company. I guess a question with an Aflac, something like that, because they're so consistent, in their revenues and profits, the question is, I guess, can they ever grow, or are they going to be stuck there and stagnant forever? That's something for you guys to figure out there. Verizon Wireless, some of you guys probably have them as your cell phone carrier. This is one of the biggest telecoms out there, obviously. A PE ratio, a little under 15 currently. By the way, look at that dividend, over a 5% yield. Very nice. So revenues on Verizon, right? Very consistent, but a little downtrending here. So they went from $127 billion in 2014 to then up to $131 billion in 2015. This past year down to about $126 billion. Then we look at the net income. They went from $9 billion in 2014 all the way up to over $17 billion in 2015, down to $13 billion this past year. Verizon, once again, why are those numbers jumping around so much? These are the type of things you want to always look into before you go and make an investment. Like why do you go from $9 billion net income all the way up to almost $18 billion, then down to 13? Like, why is that? Did you, have businesses you split off? Like, what is the reason for that? Or there some tax implications that affect your business? Were there lawsuits? Like what is going on there? Because that's ridiculous to go from $9 billion to next year you're doing 17, to the next year you're doing 13. It's like there's no consistency at all. So what is the reason for Verizon? Because it should be a consistent company, right? Like, should be consistent at the end of the day. IBM, one of the biggest tech information companies out there, been around for a long time now. This company has a P ratio of around 12 right now, very low PE. Now this company obviously has downtrending revenues here. So $92 billion they did 2014, dropped down to $81 billion in 2015. This past year dropped down to $79 billion. And then as far as the net income goes, net income's actually stayed pretty good even with those big drops in revenue. Net income $12 billion in 2014, $13 billion in 2015, and $11.8 billion this past year. So I'm actually very impressed with the way IBM has still kept up net income despite the revenue kind of being a downtrend there, guys. So very interesting company to look into. Allstate, another insurance play here. Allstate in good hands, or whatever they say. Yeah, guys ever watch college football? It's like Allstate commercials are on like every commercial break when you watch college football. It's insane. This company currently has a PE of 15 right now, very low once again. they have revenues that are pretty consistent, actually in a slight uptrend. So they did $35 billion 2014, $35.6 billion 2015. This past year they did $36.5 billion, guys, in 2016. So good trending revenues there for this company. Now, unfortunately, the net income's going the other way. So $2.8 billion 2014 net income, $2.1 billion 2015, $1.8 billion this past year. Why is that? That's a great question. Like, why are your revenues going up, but yet your net income's going down substantially? Like, that's another great company to look into. Like, why the heck is that? It doesn't make any sense, right? Usually, generally speaking, if your revenue's going up, your net income should be going up, guys, especially with a big company like that. So something definitely to look into. Another airline stock is on here. This is the second airline stock, American Airlines. This company has a 12 PE currently, very low for today's market. Now, their revenues are pretty consistent. $42 billion in 2014, then it dropped down to $40 billion in 2015. They did another $40 billion this past year, so pretty consistent. Net income's all over the place. So $2.8 billion in 2014, then they jumped all the way up to $7.6 billion in 2015, then dropped all the way down to $2.6 billion this past year. So it went from $2 billion all the way up to $7 billion, all the way down to $2 billion again. So net income all over the place with that stock. GM, once again, another automaker. You're seeing a few trends here, guys. Insurance companies, automotive, and airlines are very consistently in this little 10 undervalued stocks, right? So GM, this company has a P ratio currently on the trailing 12 months of 5. 5. Are you kidding me? How low can you go? My goodness gracious. So income, as far as net income, going very well. Or excuse me, as far as income, as far as the revenue goes, it's going very well, right? $155 billion in 2014. They did drop down a bit in 2015 to $152 billion. But then this past year they did 166. So you look at that and you say revenue's trending very nicely. Now, as far as the net income, this is also trending pretty good, right? They did $3.9 billion net income in 2014. 2015 they did $9.6 billion. This past year they did $9.4 billion in net income. So that's kind of tops off our list there. So you see some airlines. Not a lot of people believe in the airlines, mainly because they're worried, what if oil prices go up, then your earnings are probably going to drop. A lot of automakers, it's like, what are you doing with the electric wave coming in? Tesla's about to ramp up production big time starting in 2018. How's that going to affect the automakers? What happens if a recession was to happen at the same time as the move to electric cars happen? Like, how would Ford and GM and all the automakers pretty much be affected by this? It would be horrible, because that would be a double whammy at the same time, right? So big questions around those. We saw Goldman Sachs on it. We saw some insurance companies. Insurance is always one of those things, depending on, a lot of times it depends on political regimes, like what happens, with these insurance companies. Do they prosper or do they falter? So some of those kinds of things, guys. So I hope you enjoy this day. 10 undervalued stocks. Let me know if you believe in any of these 10. If you do, why do you believe in any of these 10, guys? I would love to hear from you in that comment section today. If you just came across this channel, you may want to subscribe. We talk personal finance on the channel. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk stock market investing more than anything. My stock market book is linked in the description. It has all my strategy in there. Thank you for watching, guys, and have a great day.